But that's where if you stay in like some of these things that you either follow for years or you follow for other reasons that maybe like the Freeport thing. I think just about everybody follows Freeport here. I mean, it's a no-brainer. So, but it is. But if you watch the stock, that's the thing. Yes, watching it go from like 30 down to $3 was scary, but like look at that chart. It's just crazy, especially if you expand it out. So many of the people have been in at like what, 20 or even higher than that when it was in the 30s. Yeah.
It's like, oh my gosh, Freeport's down to 30.
Oh yeah, we all used to freak out on that.
Yeah, and I bought some, and yeah, now it's down to 7.
Yeah, exactly. But now knowing that it went down to its 52-week low of 352, don't you guys wish you had bought it then?
I bought some.
Did you buy some? Nice.
About $6, yeah.
Yeah, that was smart.
I'll buy a few more, just choke it and hope it's okay.
I kept reading that it was there was the possibility that they were going to go bankrupt. So I'm like, okay,
Exactly.
no. I invested in a stock that went bankrupt, and it's not a good feeling. Have you had that at all?
No.
Yeah, that's not good. You lose everything. So.
Well, one time I remember calling my advisor and saying, "Hey, am I ever going to owe you money?"
Only if you do some of this stuff. So.
Going out on the limb that far, okay.
Yeah, since early, a couple of us today, we'll actually be able to talk about a lot of these things, like the mutual funds. Do you know do they invest in the mutual funds for you? So if you ever want to know, like they tell you, oh, we're in blah 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 mutual fund. There's an easy place to go to figure it out. You can go to this Morningstar, or you can go to Vanguard, or there are a couple different big mutual fund brokers like this, and they're on one of the last slides there. I tried to keep all the information in there. Like on page 2, sources of information, right there. Morningstar mutual funds. There are a couple other ones in there too, like Yahoo Finance, you can find them on there. But this is either the biggest or the second biggest compared to Vanguard. So I'm willing to bet that they're probably one of those two groups. And you can read through them and see, because there are just hundreds of these things now. So you can go in and look at like lower risk foreign funds, or you can do mining ones or banking ones or municipal bond funds or whatever it is. So do you know, are they super risky, or are they
No.
conservative?
We're higher risk because we're still pretty young.
Right.
So we
Yeah,
just
and that's
keep
smart.
saying, Buy. We
Yep.
don't care. The more
Yeah.
it drops, the more we want to buy.
Agreed. Totally right. And that's what the majority of these say.
Not high risk. Moderate.
Gotcha. But I'm willing to bet that your fund has probably followed some sort of a trajectory like this. So, and that's the great thing of it. You just keep buying. Just keep buying and buying and buying. And that's all I'm doing with, I'm sort of doing the same thing with my one in Scottrade here. The one that I have, it's set up virtually the same, where I'll have this thing for the next 10, 15 years, and it's just, as it goes down, I'll buy more. As it goes up, yeah, that's beautiful. At the end of the year, it gives me 40, 50 more shares, and it'll just keep doubling like that. So it's, I'm willing to bet that they're probably doing the same thing here. As soon as this thing loads, it's taking a little bit of time, but yeah.
What's it doing?
It's thinking really hard. Page unresponsive, crap, that's all right. So this is the danger though too of like doing the day trading stuff. My funny story from that you guys missed from the last Leadershop was Mr. Fox. He gets a shout out because I was day trading in the morning, and he came in to talk about something with business ethics or business law or whatever it was, and I missed my opportunity. I should have sold when he was talking to me, and then he left, and by then it had already cratered down below where I bought it. I'm like, no, and then you're stuck. Because then you don't want to sell it, because it's like, all right, it should keep going back up again, but you lose your opportunity and it's just done. So my favorite thing of showing right now is this thing. Wait, was it there? It might have been a couple months ago now, but one of those blips right there, the causation was Mr. Fox. So it was one of those. So next time you see him, I haven't told him this story yet. So you're going to have to edit this out of the video.
It's going in.
All right, so anyway, this is one of the mutual funds that I'm in. So this chapter that I cover with the students, it's all about just how to find these things. And there are just hundreds of these out there. So if you guys want to know more about them, you can look at one of those. Like this one that I'm in is a retirement fund. It's basically the same as the majority of these on there. All it does is at the end of the year, like you can't really see that, but I have 867 shares. I didn't start with that. I started at like, I think it was 700, no. Yeah, it must have been 700 and something. And each year, it will give me a dividend, which they then reinvest in this, and then I get more shares. So like this last year on January 1st, I got another 40 shares or 38.876, whatever that is. And automatically my account went right back up again. So it's definitely made me a bunch of money. Or mitigated my losses since the market hasn't been very good right now. But there are tons of those out there. Like that one is actually for retirement in 2035, I think I picked. I might have been a little off, but I'm like, all right, you know what, 20 years, hey, I'll take that. It just gives it more time to grow, and I should have a couple thousand shares in a few years. So finding things like that, like I specifically looked for a mutual fund that reinvested the capital gains back into itself so I didn't have to pay any taxes on it. And I really don't have to worry about that thing, seriously, for at least a decade or two.
What is it called?
This is the Vanguard. So it's the Vanguard Target Retirement 2035 Fund. There are tons of those.
Yeah,
So you guys could pick like the 2040, 2035. I mean, it almost does like every single year. So that's this chapter that I talked to the students about. And there are tons of them, growth funds, aggressive growth funds. Like that would be another question to ask them. Okay, are you in a growth fund or an aggressive growth fund? So, and the differences are listed there. Obviously one, the aggressive growth fund, they're doing speculative stuff, like some of these crazy ones. Like they're probably in, let's see, which one did I bookmark? They're probably doing that Whiting, WLL, that's a Whiting oil exploration group. They probably have some Freeport in there. They might have like some of the smaller banks. Anyway, you can check and see exactly what they have in there. And then there are a few others. There's some value funds that have like Microsoft and probably Amazon in there. You can also do a balanced funds or a growth and income fund, the bond funds. Obviously, those are super safe right now. But obviously, being young too, I don't want anything that's not risky. The risk things is where you're going to make the money, or lose the money in the case of like today. So the worse the market gets today, the worse my account is looking here. So, but that's all right. It'll bounce back. Sometimes you cannot look. Like how often do you guys look at your retirement?
Not every day, but
Once a month.
Scott Tracy.
That's pretty good.
2 or 3 times a week.
It's nerve-wracking. So again, if you have like certain things that you're just sitting in, like the other one that I'm sitting on is the Huntington Bank shares. That's not a buy and sell one. So all I'm doing is buying that a year down the road. When it goes up to 11 again, I'll sell it. So that one, I'm not really looking at. But that other one, that one's kind of perturbing today. Definitely making me a little nervous. So I'm not going to look at the screen anymore today. So, but the interesting ones, all right, you guys want the high risk stuff. This is the stuff that you kind of got to ask them about. In chapter 14, I really start telling my students about the puts and calls and that. And this stuff gets a little interesting. So another way, before I move on, there are other ways of finding this. If you go to Yahoo Finance, there's the ETFs, the electronically traded funds, and then I also have the mutual funds on there. Yahoo Finance is actually a really, really great website. So if you're looking for a mutual funds or bonds on this, you can also go to this website. And you can also use this for the options. And that's what we're going to do right now. So you can find them pretty easy on Scottrade, but like look at let's do Freeport. All right, so you could buy the stock in Freeport, but then you can also go crazy and actually do options for Freeport. And a good way of finding them is going to this Yahoo Finance one. And here's the basic stock stuff. And obviously Freeport right now is looking pretty good. It's $7 and something, and you would have doubled your money over the past like month. But there's another way to play this thing. You can hit the options button. And this gets really, really entertaining. All right, the top ones, it looks a little different in Scottrade and E-Trade in that, so you can't go by one particular website, but I can tell you exactly what these things mean. So the calls and the puts, the calls are listed up on top, and one of them says, let's see, Freeport, we're gonna bet that it's gonna be $3.50 over a certain period of time. And this period of time can be found, let's see, these guys list it right here at the top. So if you're gonna buy a call or a put for March 4th, let's see, March 4th is Friday? So on Friday, somebody's betting that Freeport is gonna go down to 350. But is it really gonna go down to 350? No, probably not. So this is where you use our little cheat sheet here. All right, so the explanations on the next page here. In chapter 14, I put in the definitions, puts and calls. The best one to look at, it's on the third page. A call is an option that gives the holder the right to buy the underlying security at a specified price over a set period of time. Okay, so if you look at the call, this $3.50 one, they're basically saying, okay, I can buy it for $3.50, and then they sell it at $7.53. How much money would they make? Oh, exactly. It would be gigantic. But now wait a minute, there's got to be something to that. Well, look at this part. This is what really matters. See how it's $4 for the bid and $4.25 for the ask? Add those two together. $3.50 plus $4.25 is $7.75. So in reality, that call that you're buying, the only way you make money is if it goes above $7.75. Does that make sense? This is the really risky stuff. So now the other part of this that they don't tell you is you have to have a margin account. So do you guys know, do you have a margin account on? Because Scottrade, they're ridiculous now. They want like, you got to have, I think the maintenance charge on that is pretty substantial. So if you can have a margin account, it's probably not going to be on Scottrade. Like I don't have one on mine on that one. So you're basically borrowing the money to put a bet that this stock price is going to go up to a certain level. Or the other side is you're betting that it's going to go down. And that's what that is. So the puts, if you look at the next page, how puts work, a put is an option that enables the holder to sell the underlying security at a specified price over a set period of time. So again, on March 4th, I can sell it for that, but people are betting that this thing is probably going to be worthless. So another thing they really don't tell you is, yes, you can buy it for a penny. Like this put is a penny. That's pretty cheap. So you're not really betting a lot of money. But what they don't tell you, and what our book explains, is that you have to buy at least 100 of them. They only come in 100 increment blocks. So I would make sure, like one of the questions you ask your broker there that's handling all your money, are they doing stuff like this? That'd be kind of interesting. I bet they're probably not. But this is when you get to that next level and you start looking at these prices and say, okay, what are they figuring here? Like this one, $10. Somebody thinks that it's going to go up to $10, but look how much it costs, $2.55. So you would subtract that and it would be $7.45. And how much is their stock right now? $7.56. So they're all somewhere right around each other. You're basically betting the tables at Vegas. That's what this thing is. You're either betting on red or black and either buying or selling and whether that price is going to go up or down over the next couple days. So, what do you think? Would you guys do that? No, me either. I've never attempted this either, but this is how it works, and this is actually how you make a lot of money.
Well, you caught me with the law of averages says you're going to balance some out, right? You're going to make some money sometime.
That's
but
right.
You're going to lose some other
Agreed.
times, and so maybe you're hoping you're in the black
That's right.
when it's all over.
And it's kind of the way I'm doing with the oil right now, is if you look at the different channels, so you're betting on, okay, it's going to keep going up to the upper channel or it's going to go down to the lower channel. Like today, yeah, it's actually not going toward where I thought it was going to go. So would I buy more of it? No, because it's oil and you have no idea what's going to happen with it. The market's just crazy right now. Like, look at the market now. It's down 160 today. And it was just down, actually, I think it was up like 20. So when I looked at the market this morning, now, if oil was correlated with that, which it has been lately, I kind of did think that the market was going to go down, but I thought oil was going to go with it. And that's what that DWTI bet is. But oil is not going down with the market. It's actually going up. So it makes completely no sense today. So again, going back to these option things, yeah, you got to do your research. And I'm not willing to bet on Freeport. You guys willing to bet on Freeport or something else? Like, how about your Fitbit thing? You gonna bet that it's gonna go up or down?
It's been as high as $51 a share. It is currently $12 a share.
Yeah, so one thing you could do, you could look at the options for it. So, like, let's see what's going on with options. And you can usually tell what people are thinking the basic price is gonna be based on where it's super, super cheap or a little more expensive. Like this one.
So you're on a call, you're adding that? You're adding the 10 plus
You are.
the 250?
Yep,
Okay,
so it's,
they're thinking 1250.
right, because it's gonna cost you $2.50. So instead of buying the stock at $12, it's only gonna cost you $2.50 to buy that call. But you've gotta buy 100 of them, so the minimum, if you bought one call, it would be, what, $250. So you're either going to lose your entire $250 or you are going to make some money as long as that thing goes above $12.50.
So on March 4th, if it's not above 1250,
You lose it all. Your $250 is gone. Because why would you buy it? You wouldn't buy it at $12.50 because you can buy it cheaper. Does that make sense?
Okay.
That's why if you just keep that straight, you can't go wrong with this. Add the two of them together, and I don't know why our book doesn't explain it like this, but the other thing, like looking at the $13.50 plus the 10 cents, so $13.60. If that thing doesn't go up to $13.60, you can buy it cheaper, and that means you lost your entire call. It's just gone. So that's where it gets really dangerous.
Regardless, when you do that,
The what?
you're committed to buy.
You are
when do
not.
that.
You have the option to buy, as long as it benefits you. So the same thing with the other one is you have the ability to sell if the price is right. Not to sound like a game show, but it really is. So if you bet right, you could make a bunch of money. Because again, remember that you've got 100 of these things. But look at the stock price. If you bought 100 of these, it would cost you, what, $1,219 as of that price right now. But if you bought a call, it's only $250, a lot cheaper. But you're not going to lose your $1,200. You could lose your entire $250 investment. So this is why I've never done this before. But at some point, if you play the stock market, you kind of got to try it. But you got to pick the right stock. You got to pick the right one. So like some of these, look at how cheap they are. Is it worth a moonshot to do $14.10? No, probably not. You're going to lose your $100 that you bought. Wait, $100? Let's see, 10 cents to the right. No, that's only going to cost you $10. $10 to buy a call. All right, maybe. $10, that's nothing. But if you strike on that, that could actually be pretty good. You could make a bunch of money. But these things are super, super dangerous. So, and you can kind of see this. The implied volatility, we don't really cover that, but obviously these are a little less risky. These are kind of ultra risky. And the higher it goes, the worse it is. So like these are like the insane ones. Are you crazy? You're going to lose your money. $24, it only costs 15 cents for each one. But what are your risks of losing all of that money that you did for the calls? Yeah, pretty much 310%. So yeah, I wouldn't do that.
Worse off than worse off than the lottery.
Yes, that is true. This is actually somewhere along those lines, especially as you get down to the bottom of it. Oh, there was another thing I didn't show you guys. So if you don't want to bet on this Friday, if you know or you think something is coming up, you can change it out. And they have this option stream. So here are all the option chains for this one. Now, every single stock does not follow the same pattern. Like these guys, it looks like every week until the end of April. Yeah, and then April 15th, then it starts getting a little wider. And you can start betting on like, say, like this one's kind of interesting. Look what you can do for Fitbit. It goes to January 19th, 2018. All right, ladies, what do you think? Want to bet on the price of Fitbit in the year 2018? You've got a year and, 9 months? I have no idea what it would be. You guys have any idea? There you go. If you did your research or you thought like Amazon, if you know Amazon is going to go up quite a bit more, let's see what people are betting on here. Well, see, it's all over the map. Who knows what it's going to be? But it looks like you've got everywhere from $3 all the way down to $55. And what is it right now? $12.
But it was 51.90, yeah.
That's right. So again, if you did your research and you figured out, oh, hey, Fitbit at this is not bad. So again, how you would actually read this thing is you would have to buy 100 of them. So like the cheapest one looks to be the one at $55, of course. And then it gets a little more expensive as you go lower and lower. So it appears not a lot of people are betting that it's going to go up to $55. Looks like the bet is really somewhere around like $14.60. There's a 14, 15.40, 16.40. But look at the variation between those. I mean, it's significant. You got 14.60, 14. Some of the later ones are 26.80. So again, I don't know a lot about Fitbit, but their competition is pretty fierce. So I wouldn't take a bet on that. The options, you really have to, you kind of either have to have insider knowledge or you have to have really good research on what you think is going to happen. Like, let's go back to the Freeport one. All right, so the options for Freeport, and we'll look at the futures. All right, it's at 758 right now. Hey, look at that. They've got one out in 2018. Again, not every stock is the same, but Freeport does go out to 2018, and it looks like we've got, oh, look at that. 805, 815, and again, adding them together. So 7 plus the 150, 650 plus the 2, 620 plus the 250. So looks like somewhere around the $8 range. And then these guys get into like the $9 range. And then of course you have your moonshots of 10, 12, 15, 17. And obviously those cost a lot less. You look at the price goes down as it gets later. So maybe 25 isn't that bad a bet. But again, you're only going to lose, like on this one, if you have to buy 100 shares, 2 to the right, so $45. Kind of interesting. $45, and yeah. Remember, you make money though if this thing goes above $25. So only way that thing is going to pay off is if it goes up to, like, say 30 again, and then you're going to make a bunch of money off of that. Again, you've got 100 of them, so it could be pretty significant. All right, what else have we got? So I put a whole bunch of things in there. A lot deeper explanations of the puts and calls on this thing. So they talk about leverage and some of the disadvantages, the advantages to doing it that way. But that's pretty much what it all comes down to, is looking at this option change and figuring out, okay, which one do I think it is? And you can also see where the money is. If you look at the open interest, that's where people are putting their bets. Like, look at this one. This is kind of interesting. A lot of people are betting on this one. So $5 apparently is the bet. $4.65 for each one. 12,000 of these is open interest. Not a lot of people betting on the lower ones, but definitely somewhere around here. So I'd kind of follow what the experts are doing. All right, other things. So I did put a chart in there. For figure 14.2, you can see how the puts and the calls work as the price goes down versus as the price goes up. So that graphic really shows us exactly how these things make or lose money. And again, the only thing that you could possibly lose on this is the entire thing. So,
It's all your
right. But in the whole scheme of things, are you going to lose? If you bet on the stock, you're not going to lose nearly as much as if you would bought on this. So yeah, those things, they can be kind of dangerous. All right, what else? All right, so that's pretty much the remaining chapters that we cover is how to do the puts and the calls, and how to make money or to limit your losses on it. Like one interesting strategy is actually buying the stock and either buying a call or a put. Why would you do both? Is that kind of interesting? A lot of people, this is actually why they're out there. They actually own the stock and they'll buy an option. So if they lose money, they're not losing nearly as much.
And if they make money, it's going to be offset by everyone.
That's right. They're not going to make as much. So you're not betting as much if you bet on both of them. So this would be like something similar to me doing HBAT. Like, I've bought that stock, but then I could also buy the puts or the calls based on what I think it's going to do. Like, that thing actually went down to $8 a share just a couple weeks ago. So I could have bought either a put or a call to offset that loss. Of course, I'm still hanging on to the stock. So is it really that bad? No. And that's why I didn't decide on doing anything like that. Plus the fact that losing all of your money from buying something like a put or a call, I don't really want to do that.
It just doesn't even sound good.
But, see, this is where I tried to get him to come in as a guest speaker, but Mr. Roebuck does this. So if you talk to Gina, he does this, and he's actually gotten this down pretty good. He won't tell me whether or not he's up or down, so I assume his big gains are offset by his big losses. So it's definitely risky. But then he also plays the next chapter, and that's where these option things come in. You can also do if you have a margin account, that's the only way you can play these things. So the only way to do options is to do that, but then it also allows you to do the currencies. So you can go in and play the currencies like the euro versus the dollar, or some of the ones from chapter 15 that I have on there, coffee, corn, wheat. One of my students actually did live cattle. And he said, again, because he has a ranch, he follows that, and he knows what the market is going to do. So he made a bunch of money off of it. One of my students, it was pretty impressive. And I think another student that I had, he played the lean hogs. I have no knowledge of that. So, and you can also play cotton. You can also play gold or copper. You can also do the oil thing rather than doing like one of these ETFs or the mutual funds. So all of these things you can play, but the only way to play is if you have an upgraded account. Like Scottrade, I think the minimum that you have to have in there, it's like $2,500, $3,000, $5,000, something like that. And it's out of the realm of most of my students. So that's why I tell them, all right, this is for the future. You're not going to start this with a basic account. All right, so then the next couple slides, they also get into that, the options and the futures. It's the same thing as what I just showed you guys from these things, the Yahoo Finance thing. You can find the option chains for cotton or cattle or hogs, whatever you're interested in, it's all in here. You just have to do a little more digging. So if you go into the finance home, I think they list it under, gotta find it myself now. They changed this recently here. Here it is. Under the market data, you go under this thing, and it's basically the same thing as like the options chains. And there it is, futures chains for heating oil, futures chain for crude oil. So you can bet on the price of all of these things. And they're all out there, soybeans, you name it, you can attempt it. Like, you guys have insider knowledge on anything? Oranges, grapefruit, anything?
Got nothing.
I got nothing either. So this is beyond me. I would much rather bet on the other way of doing this if you don't want to do the options thing. And again, for my students, I tell them about this is like one of the most interesting ones right now because it's so cheap. So like a lot of my students, they'll start with like $500 or $1,000. That's usually how you begin. The UWTI bets on oil, but it doesn't just bet on oil, it bets on twice the market movement of oil. So instead of doing options, you can actually do this thing, the UWTI, and it'll bet on oil for you rather than doing the options chains. So why not do that? It's $1.77. Super cheap. So if you think oil is going up, you would bet on that. And you could buy a significant amount of shares. So $1,000 will buy you, 400 and some odd shares. So pretty cheap, especially for a student. And you can sit on that thing until the next oil crisis, and yeah, it's almost guaranteed you're going to make a bunch of money. So which one would you guys rather bet on? That? The options. Exactly. So, but it's good to know both things. So you can kind of tell from some of the options, if you look at them, where people actually think these stock prices are going to go. And if you want to know the general direction of the market, you can also look at the options for the Dow Jones or the S&P or the NASDAQ or the NYSE. You can look at the options for all of these and see where traders are betting on where these things are going. And maybe that's a good time to buy more of your retirement thing or whatever ETF they're in or a mutual fund. So you can call your broker and say, hey, most people are thinking the market's going down, and it is down, still 100 and something. So maybe it's another good time to buy. So that's how you should use this thing. And then the last couple things that we talk about is just betting on like the dollar or the yen or the euro. It's the same thing as what I just showed you guys. So you can go into this Yahoo Finance to find some of them, and then they have the currency futures chain. So you can look at that and see exactly who's up, who's down. Maybe you want to bet on the Indian rupee or the whatever the CHF thing is. And again, I haven't bet on these either. So there's the British pound, the yen. You've got all the popular ones in there. You can also bet on some ridiculous ones. If you don't want to bet on the US dollar, you could bet on let's see, what's a crazy one? The Australian dollar versus the Saudi Arabian, whatever it is, or the Israeli shekel. So it's all in there. To find it, you just go into those, look for the emerging markets one or Asia Pacific or the European ones, whatever you're interested in. So if you're really entertained by currency stuff, again, this is a way of betting on the direction of a currency. Like the interesting one right now, it's, have you guys looked at the Mexican peso? There you go, there's your travel idea. So Mexican peso right now is at like 18. It's never been at 18 anytime I've ever been to Mexico. So now is actually the time to go on our Mexican vacation. So I want to see pictures, Dr. J, from you going down to Cancun or something.
We went from Yuma, we drove down across the border and went
Ah.
at Christmas time. Yeah, they like Americans.
Oh yeah, especially, well, right now so us spending our dollars there, we get a really, really good value.
Mm-hmm.
So this is actually kind of useful too if you travel. So I do look at this thing when I go off to Europe or like my Australia trip. I think I went when the Australian dollar was the highest, but now it's super cheap. Look at that, 71 cents. So if you think you know the direction of these currencies, you can also bet on those. Risky? Would you do it? No, I wouldn't do it either. No. But it's good to know it's there. So whatever our purpose is. And if this stuff really, really gives you or will give you a heart attack, don't do that. Go and look at like some of these ETFs or the mutual funds. And that's why I lump these together. Because the other option is going back to the start, like at chapter 12 here, that's where we get into these mutual funds. Like one of the ones that I have bookmarked is the EUO, which is the European euro versus the US dollar. So if I want to bet on the direction of the dollar, I can actually do that. And it's on one of these, and let's see what it's at right now. There it is, 25.36. So you could bet on that thing rather than doing the options chain, or you could bet on both. So 25.36, actually that's kind of high right now. I wouldn't buy that. Like when I was looking at that, when I bookmarked this, I think it was at like 22 or 23. So that thing is, it's not really worth an investment right now. And then some of the other ones that I have on there are other ETFs. Like this one is the Brazil one. So if you don't want to bet on options for a certain country or their currency, it's basically a bet on Brazil. And $9 for that, it's within the realm of beginner accounts. So you want to look at like cheap stuff like that. So there we go. That's the advanced leadership. What do you guys think? Are you scared now? It makes you feel better about just doing the stuff through the broker, right?
Yeah. It's a lot.
It is.
And a lot of time. I can see why you need a lot of understanding.
Yeah.
Before you jump in.
Especially like the options in that. And that's what I tell my students is you just have to, if you find something you're interested in, you just keep researching that. You follow it in the news, CNBC, or you go in and you look at the Yahoo Finance thing, or you just keep looking at everything. And another thing that we do, you can always start your own portfolio on this, the howthemarketworks.com. And every semester we play this. I think I'm still winning. Let's see. I better be winning. Some of my students have gotten really, really good though. And I'm pretty amused when, like this year I actually had to change it because we learned how to cheat on it. So there are actually ways to cheat on it. I didn't think there were, but one of my students, when he beat me, I kind of knew he was cheating. So it was a good strategy, but you can't do it in the real world. So it is a good practice account, though. So maybe before you create your own, go and do this. You can create your own, do the same things as what you can on Scottrade and that. But like I start them out with $1,000. Crap, somebody still is beating me. All right, but I'm number 2 now, and you can compare yourself to the market, see how you're doing, test your strategies. Try like the options. You can create those. Like I actually tested out my theory on the UWTI versus the DWTI. So before I actually did it on my Scottrade account, that's how I'm up. Is I actually played the market based on what I would do in the Scottrade one, and you can see how that worked out on this one. I'm up 4%, and the market's down like 10% for the year. So I'm doing pretty good, but it hasn't translated into making me a ton of money yet on Scottrade. So that's all right. Anyway, you can also see what the other people in your group are doing. So it really is a good way of actually testing things out. So I highly recommend it. You can actually create it, so you can do like penny stocks or options. And what I found was that there's a 15-minute market delay between what we buy here or sell and the real market. So if you follow on one, you know where it's going in 15 minutes. So that's how my students beat me. We did Netflix that way, and it was a really good learning opportunity because they can kind of play and learn. And that's what this entire website is about. And they also have some really interesting ones on what people are buying. So you can get some good ideas for like the NASDAQ ETF, the Dow Jones ETF. So it's actually a really good place to see what people are buying. So like I can see what all the people have enrolled in this thing all around the country and see what people are buying. So they recently changed this thing, so it might be a little more difficult to find, but here we go. Trading ideas, best and worst ETFs, and then they also have the popular stocks. So you can see what people are doing in this stock contest. And I think this is actually the one, or one of the ones that might be affiliated with that CNBC contest that they have. But there you go. These are actually some really good ideas. There's one for gold. Here's one for crude oil. Actually, I didn't even know that one existed. Look at that, a Bloomberg crude oil one. Here's one on Latin America bull market. Anyway, it's a good place to find some obscure things. And we can also look and see what people are betting on for stocks. Now, most of these are college students, so take a wild guess what college students would bet on. I think Colorado and Washington, and it has something to do with a leafy product. It's always like the top ones. They're either they love the pharmaceutical ones or they love the freaking pot companies. So a lot of them have lost a bunch of money on it. I don't know why they keep buying those stupid stocks, but anyway, you can see what people are buying or the most popular ones that are on here. It's actually really, really useful. And you can find some of the cheap ones. Like look at some of these pharmaceutical ones. And that's why I direct my students to this is because if you only have $1,000, do you really want to buy one share of Amazon? No, it's stupid. You've got to buy something cheap that we can buy a bunch of that may make us a bunch of money. And this is where to get some of the ideas from. And I've actually used this myself, so you might want to look. This might be the next like Fitbit or the next oil company that's going to go sky high, or you never can tell what you're going to find in this thing. But I have found some interesting ones on this. Anyway, there you go. My 2 cents. So you guys got to share your stories though and tell me what happens. I don't know.
Yeah.
You've had some good bets.